The price of gold, silver, and other precious metals has been on a tear recently, with gold already up 19% in the last 6 months. This has been largely due to the current global situation and uncertainty surrounding the future of the economy as well as economic relations. Today I'll look into the cause of the spike in gold and determine whether it is a good potential buy right now, so stay tuned. Hi everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success investing, having your money make money for you, as well as going against crowd thinking on certain topics. So if you like these topics, please hit the subscribe and like button. It just helps me to continue making videos like this. I also want to make a disclaimer that this is just an amateur investor talking about my opinion using data, but just don't take it as personal financial investment advice. That's all I ask. So let's get into it. On July 23rd, which was yesterday, 2020, the price of gold shot up close to its all-time high record of $1,923 per ounce, reaching a high of $1,897, which is just 1.4% off this high. This occurred as the stock market had a largely negative day, with all three major indexes down. However, in the last 3 months, the stock market has also been on a steady climb. So why would gold also be doing the same thing? It doesn't make much sense for gold and the stock market to be going up at the same time. Well, I'm sure we're all aware of the fact that at this point, the stock market does not correlate with the actual economy, or it hasn't yet. We are at near all-time high unemployment rates, approaching the level during the Great Depression. And businesses are going bankrupt as we speak. Right and left, they're going bankrupt. So the real economy is definitely suffering. How could the stock market be doing so well? This is largely due to all of the quantitative easing, stimulus, and other monetary injection that has occurred since the first drop in the stock market. Even though the effect of shutting down a fragile economy did break it, we, meaning the politicians hoping for re-election, are pretending everything is alright and that quote-unquote QE infinity, or buying debt infinitely, or negative interest rates could save us. And these in reality definitely cannot save us. It would be the equivalent of distracting the passengers on the Titanic by rearranging the chairs on the deck and promising them all an entertaining evening and champagne for all. And really that's just distracting from the underlying problem that the boat's hitting an iceberg and they're going to sink. It doesn't matter if it's going to be a great evening. It's just the boat's on its way to the bottom of the ocean. So, likewise, the real problems in the economy cannot be solved by any of these solutions of quantitative easing, buying corporate debt, buying municipal bonds, by any of these things. Negative interest rates, none of these can solve the underlying issues that are currently causing this. Gold is not really an investment of sorts. I need to make this clear. It is only a good store of value. So as the value of the dollar goes down, gold's value only stays fixed. So it does go up against the dollar in value, but it in itself cannot go up in value. It just appears to be going up in value over time against the dollar, because the dollar and basically all fiat currencies are losing value over time. So in response to fiat money printing, gold has been going up due to the anticipated monetary inflation that this brings along with increasing the money supply. However, we have yet to see inflation actually happen as a result of this. I've talked about this before, but with consumers already saving at record high rates and corporations laying off workers instead of hiring them and merely just storing away the stimulus money in their bank accounts, the money has not been spent by and large. Monetary velocity, or how fast the money is moving from a spender to a receiver and then from that receiver to another receiver, this has dropped significantly with all the saving going on. So remarkably, gold has gone up on anticipated inflation that should be happening, but it actually isn't happening right now. As we near another stimulus bill that is likely to pass in the House and Senate, gold could only climb more in the coming months, along with the stock market potentially. However, all good parties must come to an end, and this hyper bubble in equity markets is likely to come to an end in similarly sad ways. Negative interest rates and money printing cannot support a sinking economy. And when the crowd finally begins to realize this, they will leave these equities as quickly as possible as they see it starting to go down. According to Forbes, I like to call it Forbes, it's technically Forbes, this could cause another situation like the Great Depression and the recession in 2008, when we actually experienced deflation. The dollar could temporarily rise in value against other stores of value. And like we saw at the beginning of the deflationary period in 2008, gold could actually go down along with equity markets, but this would only be briefly. However, as soon as inflation begins happening again, gold will begin rising again against the dollar. With all of this pent-up inflation that hasn't happened yet, even with trillions of money printed, there is no telling how high gold could actually go. My best guess, and this is definitely only a guess, would be $5,000 per ounce within 2 years of the bottom of the recession. So gold could be a very good asset to purchase at the bottom, and it definitely could outperform other equity markets like stocks or bonds. So the main question is gold a good buy right now? And I'm really on the fence with this one. Like the equity markets, I actually do think there could be a short-lived bear market in gold and other stores of value coming up during the deflationary period that will likely happen. However, there are many uncertainties that could come into play, such as the U.S. potentially returning to a gold standard. I know that the current president really has, touted this as a potential solution. And this would have the potential to send gold to even higher prices than what I was just saying. If we were to return to a gold standard, they would have to set the price of gold very, very high to essentially equate the current supply of gold we have to the current money supply we have. So, while this is unlikely in my opinion, there are definitely two sides to this argument. Regardless, I can say with a high degree of certainty it will be a good store of value in the long term, and has been over the last 30 years and frankly all of human history. It's been around as long as humans have been around. They've been using it as money, much longer than any sort of fiat currency. So there are definitely strong arguments to make as to both selling gold right now and buying it as a bargain, 2 years later, or buying it right now and holding it for the next decade or however long. Anyway, if you like these topics, please hit the subscribe and like button down below, and I hope to see you again.